Hello, and welcome to the Sage 50 Mastery course, a comprehensive guide designed to equip professionals, beginners, and business owners across the globe. In today's lesson, we will focus on an essential topic as far as working with Sage 50 accounting software is concerned. A topic within the domain of inventory management, and that is inventory adjustments in Sage 50. If you look here on my screen, you'll find out that there is a flow, which I believe you can see. The inventory circle from your purchase, your procurement, stock received, stock recorded, physical stock count, inventory adjustments, discrepancy detected, discrepancies, and all of that. If you've gone through the previous lessons on inventory management, as regards the module, we looked into the aspect of how to set up inventory and services. We also talked about being able to track your inventory and setting reorder points. And we looked into analyzing your inventory data. Now, I told us in that lesson that inventory management is not just about keeping stock, that it is a critical function that directly impacts profitability, cash flow, and the efficiency of your operations. And adjustments are where precision truly matters. To begin, permit me to clarify the importance of inventory adjustments. Now, when we talk about inventory adjustments, I'm basically talking about those discrepancies between your physical stock and your system records. The reason is because discrepancies between your physical stock and your system records can arise for various reasons. It could be shrinkage due to theft, damage, or maybe human error can actually lead to these discrepancies. Now, these discrepancies, if not managed properly, can lead to inaccurate financial statements. It can also lead to supply chain disruptions and increased cost. But here is where Sage 50 steps in, because Sage 50 has user-friendly tools. Sage 50 enables you to adjust your inventory with precision, ensuring your books are always up to date and your decision-making is backed by accurate data. So I'll be taking you on a step-by-step process in Sage 50 so you understand how to adjust inventory in Sage 50. Now, let's move into the practical aspects. In Sage 50, whenever you want to adjust inventory, the first thing you have to do is to access the inventory adjustments tool. So here in Sage 50, you have to navigate to the inventory and services module over here. Click on it. Now, when you click on it, look below, you will find out that there is this very feature called inventory adjustments. I'm sure you can see it here. Inventory adjustments. This is the hub where you will correct stock quantities values and item attributes. Another part where you can locate it is also on your tax menu. So if you go over there, you will find out that we also have the inventory adjustments, which is this. So step one is for you to access the inventory adjustments module, either by coming through the tax menu or by going to the inventory adjustments feature you find on your inventory and services module. So what you're going to do now is to open it. So you double click. Now, when you open this, what you have to do next is for you to select the item that needs adjustments. Where do you select it? Here, where we have item ID. So you come click on the glass icon. It will now give you a list of all your items. Then you select that very item that needs adjustments. Hope you know why we are adjusting. Take, for example, you happen to work in an organization and month end, you normally carry out your inventory audits and you realize that a particular product is missing. Now, what you have to do in that case is to adjust what you have on the system because it is missing physically, is not missing here in the system. So your record must tally. So what you do here is adjustment. And when you're doing this, you must provide a reason why. Sometimes adjustment might be due to a particular item happen to be damaged. So this is where you come and adjust so that you have your record match for your system and also physically. So like I said, you come over here, item ID, and select that very item that needs adjustments. So let's assume that the item that needs adjustments happen to be the solar power kits. So I'm just going to select it. Now, this could be due to discrepancies identified during stock audits. Like I said, damaged goods or supplier errors might be when this solar power kit was supplied. The supplier told us that it's complete. And in the Sage system, you already went ahead to receive this inventory, only for you to go take your stock count and you realize that the actual item delivered is not complete. So accuracy at this stage is key. Very important. And you must select the exact item from your inventory list, as I have done here. Once you have done this, provide a date, provide a reference. Job is not necessary, ignore that. GL source account brings out your accounts from which you can see it, talking about the cost of sales account, which keeps track of the value of that item. And that will be the account from which adjustment is taken. Unit cost talks about the cost price for that item. Now, what you will do is to enter the adjustments. So over here, where we have quantity on hand, you can see displaying 500. So what this means is that at the moment, what you have in stock is 500 in quantity. So here where we have adjust quantity by over here, adjust quantity by, this is where you're now going to provide and enter or impute the new quantity So if stock was damaged, or maybe stock happened to have been stolen or mistakenly counted, this is where you make those changes. Stage 50 allows you to adjust quantities. It allows you to adjust costs. So what that means is you can also adjust value over here, value of the item, or even revalue your stock for financial accuracy. So on this note, let's assume that 5 was actually affected, damaged. So we'll come over here and we say -5. The moment we enter -5, the new quantity becomes 495. So each time you want to reduce, you want to take away a particular number of quantity of items, which might have been stolen or damaged or mistakenly counted, you use negative sign before the actual figure. And that's the reason why we are entering minus sign coming first before the actual figure. But if you're adding addition, you won't add up the minus sign. Just put the number, the digit itself, which I've just done. And by the time I click outside, you can see we now have 505. So let's assume that the 5 item was actually damaged. So I'll enter -5. So this is the third step. You enter your adjustments. Step 1, assess the inventory adjustment model. Step 2, after opening it, select the item. Step 3, enter the adjustments here where we have adjust quantity by. Step 4, provide a reason for adjustments here. Reason to adjust. You must know that every adjustment must be documented with a reason. This step is crucial for transparency and audit trail. Whether it's due to loss, whether it's due to revaluation, or whether it is due to an error, always log the justification. So reason to adjust, I will come in here and say damaged. I hope you got that. So once you're done, you come up and click on your save. And that's it. When you click on list, you will be able to keep track record of each adjustment you have done. You can see it. And what you have to do is to confirm that yes, this very item, indeed, the adjustments have been carried out. So you come back to inventory services, click on inventory items, click on view, and it will give you a list of all your items. So click on solar power kits. You'll find that on the column called quantity on hand, we are now having 495 quantity of these solar power kits. 495. Why? Because we have adjusted. So if you want to view the adjustments done, you come to your left, you'll see where we have view inventory adjustments. View inventory adjustment. I'm sure you can see this. View inventory adjustments. So this is where you're going to come to. You come, click on that very option. So if I click on this view inventory adjustments, it's going to bring me back to the list and I will get to see solar power kits when it was adjusted. And I also can run my inventory adjustment journal, my inventory unit activity reports, my inventory record worksheets. Or I will double click on this solar power kits adjustment and I'll find the reason there as what? Damaged. Another thing I can do here is to go through my inventory reports. When I go over to my inventory reports, I come down, click on inventory here. After clicking on the report model, you will see those reports are all here. So if I double click on this very one, you find out that we have it displayed here. Solar power kits, 5, damaged. Now, before we round up this very lesson, I want us to elevate this discussion beyond just the mechanics of Sage 50. The reason is because adjusting inventory is not a reactive task. It's part of a strategic approach to inventory management. As my students across knows, I always share a few best practices to ensure their inventory adjustments are always spot on. So I would also love to share with you the first best practices to ensure your inventory adjustments are always spot on is what I call regular audits. Regular physical stock counts are essential. These audits are the backbone of accurate inventory management, allowing you to catch and correct discrepancies early. So if you want your inventory adjustments to always spot on, then you must carry out regular audits. Secondly, data-driven adjustments. Through the power of data analysis, you can identify recurring adjustment patterns. Are certain items consistently being adjusted due to damage? This could indicate deeper issues in handling or storage. So I will always tell my students to use data to not only adjust, but to improve their processes. Thirdly, adjustment trends analysis. By analyzing inventory trends over time, you can forecast demand more accurately and even reduce the need for frequent adjustments. And this is where Sage 50 integrated reporting tools come in handy. And I want you to make use of it. Under the Reports app, make use of it. Utilize them to drive your strategy. Now, inventory adjustment also have its financial impact. I'm sure you are aware. Every adjustment you make directly affects your cost of goods sold accounts. It also affects your profit margins and even your overall financial health. By ensuring your inventory is always accurate, you're safeguarding the integrity of your financial statements. And that's the reason why if we go to one of these reports, you figured out that Sage 50 functionality ensures that every adjustment you make is immediately reflected. Immediately, it is reflected in your financial reports, giving you what I can call real-time insights into your business performance. So if I go to financial statements and I am clicking on my balance sheet and I say, okay, you notice our inventory here. If you scroll down, we'll have everything reflected accurately. So this is very important for you. Inventory, as we know, is the lifeblood of many businesses, from manufacturing to retail shops. Whether you operate locally or globally, mastering inventory adjustments can significantly improve your operational efficiency. It can reduce wastage and protect your bottom line. So please take notes and go through, because with accurate inventory management, you are not only minimizing costs, but you're also setting your business up for scalability and growth. And one more thing, inventory adjustments are not just an occasional task. No, they are a strategic function that, when mastered, will improve the accuracy of your operations and the strength of your financial health. So this is a feature Sage 50 provides to handle inventory adjustments with precision and confidence. So if you're ready to take full control of your inventory, this very lesson is an opportunity for you to master every aspect. So thank you for taking part of this lesson, and I look forward to seeing you in the next module. Stay tuned for more insightful lessons here at Mirademi.